Great. So we can start. We can start from where we have the definition of the financial system, or this Islamic finance. So we say that this Islamic finance is a financial system that is based on the principle of Islamic law and guided by Islamic economics. So if at all you have not written the short notes, we are going to be mentioning areas that you need to write down. Shorthand notes, like this one. You need to have this. Islamic finance is a financial system that is based on the principles of Islamic law, that is Sharia, and guided by Islamic finance. That is important. This is a financial system. But they are guided by Sharia. And through that, you're able to see that they also look at the Islamic finance, Islamic economics. So you need to have that. Know that it is a financial system. It is a Islamic finance. Islamic finance is a financial system. Shorthand note. Islamic finance. It is a financial system. Based on the principle of Islamic law. Principles of Islamic law. That's what they call Sharia. And the economic what? The Islamic economics. So it aims to ensure that a financial transaction, there's somebody who don't have the notes, somebody to reshare the notes in the group, somebody to reshare. Kuna mtu hana hizo notes, probably they joined late. So when the examiner asks you to define the Islamic finance, kindly don't forget to include such terms, right? Don't forget to include such terms. Good. It aims to ensure that financial transactions are in compliance with the Islamic values and ethics, such as fairness, social justice, and equality. Yes. Through the Islamic finance belief, through these belief and their values, they just advocate for equity. They just advocate for fairness, right? So, if at all you're doing business, you are in partnership, you have a joint venture, at any given point, if you make a profit, you are going to share that profit according to the pre-agreed what? Ratio. If you make a loss, the same happen. You're going to share that loss according to the pre-agreed ratio. It does not matter. It does not matter whether you just brought the ideas in business or the finances. See, it does not matter. What matters, are you practicing equality? Are you practicing fairness? Right? So the main objective is to make sure that fairness, social justice, and also equality are practiced. Great. What are some of the principles that govern the Islamic finance? Principles. What are some of the guiding principles? So we have some principles here. The main principle of Islamic finance. Main principles. So this one is also something that you can put down. Principles of Islamic finance. Principles of Islamic finance. This is also something that you can put down. Number one, wealth must be generated from legitimate trade and asset-based investment. Yes, wealth must be generated. Wealth must be generated from legitimate trade and asset-based investment. You know, when we talk of transparency, the Islamic finance really tend to help these people to practice transparency. So the wealth that you have should be generated from a legitimate what? A legitimate trade. And asset-based investment. This is a form of financing. It is a form of financing that they use, the asset-based. Instead of borrowing loan whereby you're going to pay that loan together with interest. Remember, interest is not allowed. It's not allowed. They just see that as a exploitation. When you borrow and then you pay that principal amount together with the interest, it is termed as exploitation. So the financing mode is through asset-based investment. So this is a very important principle there. Then we have investment should also have a social and ethical benefit. Investment should also have a social, and an ethical. An ethical benefit to wider society. Benefit to wider society. Beyond pure return. Yeah. You should not just consider return. You need to check this investment. Is it really beneficial to the society? Is it including the people living allowed? If it is employment, have you tried to extend your hand to those people? Or you just employing your relatives, your cousins, all your brothers and sisters? You see, it should not be like that. You need to extend your hand to the wider society. Then another principle that guide them is risk should be shared. I think this one I should not elaborate. This one I've said. Risk should be shared. Number next, all harmful activity should be avoided. All harmful activities should be avoided. Plus, those are some of the principles, the major principles under Islamic finance. This is what governs them. Yes. The results we share. Any activity that is harmful, Avoid that. What about extending the help to the society? Yes, it is allowed. What is it? What is it? Class, if examiner asks you about the principles, is it now possible for you to at least give 4 of them? Is it possible? Is it possible? Is that okay? Is that okay? Principles of Islamic finance. Is that okay? Good, good. Have them, have them, have them, have them, have them, have them. They really help you in case examiner asks you. Islamic finance is guided by Sharia law, which prohibits certain activity and transaction that are considered unethical or harmful. Some of the activity that are prohibited by in Islamic finance include prohibited. They prohibit some activity. Who can tell me? I had mentioned one. I had mentioned one. Prohibited activities. I had mentioned one. But there are some of the things they don't believe in. We don't believe in. One. I had mentioned one. You can remind us. I had mentioned one. Taking off interest. They don't believe. According to the Sharia. Yes, riba. Thank you so much. Riba. Examiner will bring for you the word riba. Define riba. You guys, you know these things. Gambling. Yes. Yes. Gambling, that is a game of probability, a game of chance. That one? No. No. They're not supposed to engage in the gambling. Interest. So when we talk garar, garar, that is mwanmisi, illegitimate. Yeah, some of the things are termed as illegitimate. Sasa haya kuna halal na haram. Sasa blessed, halal iko sawa. Halal iko sawa. Haram ndio haram, there are those prohibited activities. Halal iko sawa. Umepatana na hoteli. Have you come across hotel rated halal? Halal. Motel hata kubwa kubwa. Halal. Hiyo ni legit. Legit. Tuko sawa. So, examiner akikuletea halal, hiyo sawa. Haram, haiko sawa. Sawa. So, we start with the riba. Riba means interest. So, wewe utaletewa riba, ukumbuke ni interest. Sawa. Examiner anakuletea riba. So, know that you're dealing with the interest. Dealing with the interest. So, interest, Islamic finance prohibits the charging or payment of interest, which is seen as exploitative and unfair. Why give me some money, then I've gone to use the money. You want me to return the same money. On top of it, I attach interest. So they find that as exploitative and unfair. What do you think, by the way, according to you? What do you think? Let's look at it literally. Is it unfair? Is it unfair? Give me some money, and you want that the same amount, and then I top it up with the interest. I also find it unfair, although other people can argue that yes, this money that I gave you would have been working for me within that period of time, and therefore you are to compensate. So that is one of the things that is prohibited, interest. Garar, yes, garar. Somebody had also mentioned garar somewhere. Garar. Number 2, garar. These are uncertainty activity, uncertainty events. Uncertainty, you're not sure. Very unfair, especially circle loans. Sometimes you find that, but now, you know, every everyone has their own what? Their own belief. Now, for the circles now, they fall under the conventional. So we have Islamic finance, and then we have conventional finance. But there's some examiner will bring for you, differentiate between conventional finance and Islamic finance. Those are some of the things that you need to check. Some of the things that you need to check. Garara, Islamic finance prohibits transactions that involve excessive uncertainty or risk. Yes, excessive uncertainty or risk. Then we have this one, Hamisi atatusomea. Is it Masil? Masil, eh? Masil, eh? We have said you differentiate between Islamic finance and conventional. Conventional sasa ni hizi zingine kama bank, hizi zingine gambling. This is also a game of chance. This is also a game of chance. You are not certain. You're not certain. 50-50. Sometimes 50-30. Win-win. Ati unaekea GG. Yani just guessing. And remember, the system that you are using, it is the system made by a person. So that system is owned by somebody else. Do you think somebody can just come up with a system for you to be winning? In the real sense, it's not possible. So, machine gambling is also prohibited. It's also prohibited. We go to haram. Haram tumesema, that means prohibited. So some activities are prohibited. Like for instance, Islamic people, the Islams are not allowed to sell pork meat. They are not allowed to sell things to do with alcohol, right? Alcohol. But nowadays I have seen some, they have even clubs. I don't know. Maybe it depends with the person with the knowledge. It depends with the person with the knowledge. Things are turning. Things are turning. Then excessive debt. They also prohibit people having excessive debt. Through excessive debt, you're going to be depressed. Yes, you're having excessive debt. Right, left, center, debt. All the time you have debt. That one is not allowed. Then, class, we can now look at now, how do they finance their activities? How do they finance their project, their investment? How do they do it? They have two ways. So raising capital in Islamic finance is a crucial aspect of financing activity in the Islamic finance industry. The principle of Islamic finance prohibits the charging and paying of interest, which is considered shari and not allowed under Islamic law. Therefore, alternative financing mechanisms have been developed to meet the capital need of business and individuals. I've seen a point here. Yeah, conventional finance. Yes, that is it. You can check. You can check. Don't leave any stone unturned. So, class, we have several ways how the Islamic finance their activity or investment. One is equity-based financing. Equity-based financing. This is how they do it. So under equity-based financing, we have several things like mudaraba. Class examiner atakuletea hii, telling you to define. Now mudaraba is a form of what? Partnership. So it is a type of partnership between two parties where one party provides capital, and capital is known as rab or mal, and the other party provide expertise and effort, that is mudariba, to manage the venture. You get? So when you talk about mdaraba, this is a type of partnership between two parties. Mmoja anakuja na expertise, knowledge, na skills. Mwingine analeta pesa. And for the two, they have to agree. If we do this business, we are going to share either profit or loss according to this ratio. 2/3 or 2:3, 2:2, according to what they have agreed. And that's what happened. That's what happened. Have you ever had a Muslim who are fighting because of money? Have you ever had, by the way? It's very rare, eh? Very rare. Very rare. Fighting. Wamechukua mapanga. It's very rare. Very rare. Because they usually agree. Yes, tufanye 1, 2, 3. Tuwekanie hii biashara, lakini tunagawana hivi. And that's done. So mdaraba, when examiner asks you to define mdaraba, know that this is a form of partnership between two parties. Okay, then we have musharaka. Musharaka here. What is a musharaka? Is it a joint venture? Let's see. Yeah, a form of joint venture where the investor and the entrepreneur share both the capital and the management of the project, and the profits and losses are shared according to their pre-agreed. They use guns, so you can't joke with the money. Is Freemason in Islamic prohibited? Where? Well, that one. Where? Okay, let's see whether we shall get some point relating to the same in the notes. Len anasema wanatumia guns, so you cannot joke with their money. Okay. Okay. Sawa. So tunasema kwamba musharaka, this is a form of joint venture whereby now both parties participate in the management and also contribution of capital to run the business. Then we have wakala. Wakala number 3. Wakala. So this is a form of agency where the investor entrusts the management of their funds to the entrepreneur who acts as the agent and invests the funds on their behalf. Yes, in the cases whereby trust, the owner is not able to manage their resources, to manage their farm. They just tend to find an agent who will take care of that, who will take care of their resources. That is wakala. It is agency theory. Principal agent relationship. Then we have the next one, which is sukuk. And it's sukuk. How do you say it? Sukuk. That is Islamic bond. So they have some bonds that go right in line with the Islamic law. Yeah. So those bonds go in line with the Islamic laws. Next one we have ijara. Ijara is leasing. I want after we read this, you tell me whether this is a finance lease or an operating lease. Ijara inamaanisha leasing. They have these ijara thing, leasing. Acha tuone what they are saying regarding the same. Ijara is a form of leasing where the lessor investor buy an asset and leases it to the lessee for a pre-agreed rental. The lessee has the option to purchase the asset at the end of the lease period. Sasa, this one we had it yesterday, by the way. You were looking at leases yesterday. Now, can you tell me which type of lease is this? Ijara. By the way, hizi vitu ukiletewa, hizo marks anguka nazo, Yeah, it's a finance lease. Yes, it has an option, or the lessee has an option to buy it at the end of the lease. Thank you so much. Thank you so much. Good. Then we have murabaha, 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 murabaha. This one is a cost plus financing. Cost plus financing. So this is whereby 0.4, please, 0.4, 0.4, 0.4, 0.4, 0.4, sakuk. Sukuk. Sukuk tumesema ni Islamic bond, Islamic bond that are structured in a way that comply with Islamic law. Islamic bond. They have their own bond. So they are aligned with the Islamic law. Islamic law. Hakuna vile ati kutakuwa na interest kwa hiyo bond. They align with the Islamic law. Spelling. Oh, sukuk. Sukuk. It is the sukuk, the way I'm mentioning it. Asante. Asante. Sukuk. Sukuk. Mrs. Can tell us whether we say it sukuk or sakuk. Maybe it is sukuk, eh? Yeah, sukuk. You just pronounce it like that. Sukuk. Haya, sawa sawa. So we'll talk about murabaha or cost plus financing. This is whereby I buy an item, and then I buy. I'm an auctioneer. I buy and sell. So I buy a cow, and then I come to you. I want to sell to you. I have to tell you that I bought this cow 20,000 and I want to sell to you 25,000. So I'm very frank, I'm very transparent of the profit that I'm going to get. Either you agree to buy it or not. You get? And I'm very frank. But watu wengine, my friend, hata utakuta you are buying that thing at a profit of 100%. Maybe bought at a 20, selling you at 40. You see, that is 100%, but you not know. But for them, for this one, you are able to know even the profit that person is getting. Sababu anakuambia, me, I bought this thing at this price, and I want to sell to you at this price. Do you agree? If you agree, you give the person the money, you take the asset or the item under consideration. So that is a murabaha, cost plus financing. Cost plus financing. Then we have the last one, Islamic microfinance, a form of finance that is designed to save the needs of low-income individuals and micro entrepreneurs who lack access to conventional finance. It operates on the principle of profit and loss sharing and is structured to meet the needs of these communities. Great. So that is one way, or that is one way on how they do survive. They do survive through the equity-based financing. Then the second one is asset-based financing. Asset-based financing. Asset-based financing. So under asset-based financing, we say that asset-based financing is a common financing mechanism in Islamic finance. It involves the use of tangible asset as collateral for financing. You see, when I talk about asset-based financing, now I'm talking about tangible asset. Tangible asset. Yes, you want us to finance your business. Who do you have? Who do you have? Who do you have as a tangible asset? That will be used as the collateral, as the collateral. Aha. So we have several forms of asset-based financing in Islamic finance. One of them is a very difficult name. Number one, a very difficult name. Ijara. This ijara nilikuwa najua hapa ni leasing, lakini sasa hapa umeniletea ijara wa ijara I know there are some silent letter here, or maybe, I don't know. That one is one of the asset-based financing. What is it? It is a form of lease to own financing where the lender purchases an asset and leases it to the borrower. So it's also a form of leasing. It's also a form of leasing. This one, ukipatana na njara yoyote mahali, know that is a form of leasing. It is a form of leasing. It is a form of leasing. It's almost the same, by the way. Then we have salam. We have salam. Number 2, we have salam. We have salam. Salam nayo wanasema it's a form of forward purchase financing where the buyer agrees to purchase goods from a seller at a future date for an agreed price. Yes, a forward purchase. Then we have the last one, which is istisna. Number 3, istisna. Istisna. This is also it's also a form of prepayment financing where the buyer agrees to pay for goods that will be delivered at a future date. So you pay, but you don't receive the goods at that time. You will receive those goods at a future date. Class, I would like to know whether we are together as far as those points are concerned. Are we together? Are we together? Remember all these in your notes, and you had made some summary regarding the same thesis telling us yes. Good. Are we together? Are we pamoja? Are we together? Are we together? We together? Great. Great. Now, class, below there, we have some questions. Of course, questions derived from the past papers. Kindly have them. And the answers are also provided. So it's just a matter of reminding yourself. I trust that this weekend you are going to remind yourself those questions and write them down. Is that true? Those questions, there are five, just 5 questions. Kindly create some time and go through them. Is that okay? Hiyo iko sawa? You can use a thumb to indicate that we are together as far as that is concerned. Great. Now, I want us to move direct to topic number 1. Topic number one. The overview of financial management. 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 That is topic number 1. Simply, class, who can define for us, or who can tell us what is financial management? The best part of this is that already what topic 1 is trying to tell us, we have already covered, right? What topic 1 is trying, it is trying to foresee the topics that are coming, and those topics tumezipitia. So it will be very simple to understand. Yeah. So financial management, who can, in a layman's language, very simple language, if the examiner asks you to define financial management, what can you say? Financial management. Inataka tu hiyo simple language, hiyo just simple, just simple. Don't complicate these things. Unaziweka vile ziko. Prudent utilization of fund. Joseph, thank you, thank you, thank you. Prudent utilization of funds. Haya. Any other person? Any other person? Planning, controlling, and monitoring finances. Great. Aha. You guys are great. Aha. Good, 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 good. As whatever Lydian and Joseph have given us, those points are strong points. Those points are strong points. It's a principle on decision making on how the managing or to manage finance, on how to manage finance. That is Frida. Great. Asante. What we said, at any given point, when examiner bring to you a theory question, please don't leave it a blank space. Please attempt. Please write something. And I give you a very nice scenario whereby one student has written something, and the other student has left a blank space. For the student who left a blank space, if the examiner come and give the student 2 marks or 3 marks or so, and the other one, the examiner give him or her 0, you see there is a problem. There is a problem. There is a problem. You see, blank space, you give 0, you give 3, and then somebody had written something, and then you give 0. So it does not make sense. Blank means nothing, nothing, nothing. You have nothing. So I have seen other obtaining and utilizing financial resources efficiently and effectively. Great. Minimizing cost and maximizing revenue. Yes, 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 yes. If you combine all those things, you're coming up with a very strong point on what is financial management. And then, remember we said that all of us, we are in that foot of a manager, right? The foot of a manager. Foot of a manager. So there are some roles of a manager, functions of a manager, functions of a manager. So when I talk about financial management, it will be touching on the processes that will happen until we get return. At the end of the day, tunataka tupate return. So I will be sourcing fund. We come to you. If we share the common idea or the common agenda, ask you, is it possible? You bring this portion of money, I bring this, and the other person bring this. I have sourced the fund. After sourcing the fund, I need to have a business idea in mind. I need to have a project in mind, a project that I need to undertake. We undertake the project. But remember, before you undertake the project, what should you do before you start undertaking the project? Somebody. Now these things sasa utazielewa zaidi because we have already done some of the things. Before you undertake the project, what should be done? Assume I have a variety, project ABC. What should be done before you start exploiting it? What should be done? You're in a fall under now capital budgeting. Under capital budgeting, you do the project appraisal. Appraisal. You have to determine between the many projects that you want to undertake, which one will be profitable, right? Which one will be profitable? You have to do the project appraisal, right? You know all those methods of appraisal, all those techniques used in appraising the project, right? After you do that, now select the best project among many. You select the best project among many. You undertake it. At the end of the day, great, you evaluate. Ni ka process tu hivyo. And remember, the objective of the firm always is to maximize profit. Therefore, that's why you first of all want to know, among the various projects, the different projects that you have, which one will be best, give you the best profit. After that, you are going to get return. Of course, after a certain period of time, you're going to get some return. What happened after return, class? You eat alone? What happened? Haya, tumepata return sasa. Ka process. I want you to, nataka tu uielewe. Understanding. Tulisema kwamba hapa unahitaji kuwa tuna the understanding of the concept. Yes, now we have the return. Ufanya kazi, return iko. Haya, linatuambia we can plow back. We can plow back. Okay. There are some of the costs that have been incurred. So we have to put aside those costs. Kwa sababu lazima kama ni stock tununue. Right? So kuna ile retained earning. Kuna pesa itabaki. What happened to that? Remember, hii kazi haikuwa yangu peke yake. We had other people, shareholders. So you can give them dividend. You can share dividend to them, right? You can share dividend. And then biashara inaendelea. Unaona? So already umeweka cost aside, and then you've given dividend to shareholder. They have felt good. So even in the next financial year, they're going to chip in and finance or refinance the business, or they top up. They continue buying more shares, and many more investors will be coming to the company. Many more investors will be coming to buy shares to your company. So generally, that is the process. So how you manage the finances from the time umesearch, umetafuta, umeinvest, umepata return, umechukua cost, umekita for all the costs that are required. You have the retain, and then you share. You repeat that process. The process is repeated for the progression of what? Of the business. Good. So if we look at the first part, they are trying to tell us what is ahead. They are trying to tell us about time value of money. By the way, time value of money, I hope you guys know the difference between time value of money and time preference for money. Time value of money. Somebody to remind us, just define. Time value of money. Time value of money. You're just trying to mention Apple. Somebody is typing. Risk return, capital budgeting, working capital management, dividend policy. Just trying to foresee the topics that are coming. I want us then go to the role of a finance manager. Is somebody angusha time value of money definition pale. The value of a sharing today is more than the value of the same sharing tomorrow. And that's why we said, if somebody has your money, let them pay today. If not now, today. Right? Yes. So ndizo vitu unafaa. Ukikuwa tuna hizo mambo iko sawa. Na time preference for money, that one tells us that we need to use that money today. Now, we have some things that want us to use that money today. There are some transactions that we need to take. The value of the sharing today is worth more than a sharing in future. Great. Thank you. Now, class, I want us to just discuss. This is discussion, right? Discussion whereby we we coordinate, and we cooperate. The role of a finance manager. The role of a finance manager. What is your role as a finance manager? Remember, all of us are managers. What is your role? The role of a finance manager. Now here we have splitted the roles to every stakeholder. Every stakeholder. Remember, there is a difference between a stakeholder and a shareholder, right? The shareholder is who? The owner of the firm. Stakeholder are other related parties to the firm, right? Sawa. So shareholder, maximizing shareholders' value. A finance manager is responsible for making decisions that aim to maximize the wealth and the value of the shareholder. This includes optimizing financial performance, profitability, and return on investment. Transparent financial reporting. They follow up. Whether the financial reporting is transparent. Providing accurate and timely financial information is essential for shareholders to make informed decisions. The finance manager ensures compliance with the accounting standard and regulations and maintain transparent reporting practices. Ile G inaitwa GAAP. Then dividend policy. The finance manager plays a role in determining the dividend policy, balancing the company's need for investment and growth with the shareholder expectation of return through dividends. So they have to check the way I've told you. Yes, we have return at the end of the day. But remember those return, all of them, we cannot term them as profit. There were costs that were incurred to undertake all the operations in the farm. Therefore, we have first of all to eliminate the money that will cater for the cost for the next financial year, right? If it is buying of stock, such, whatever that remain, that is the profit. Of the profit, hapo ndio huwa tunalipa nini? Tunawapatia kakitu from the retained profit. So all those relate to the shareholder, and how the finance manager take care of what? Take care of the firm. Then to the society, this can be done through the CSR, the corporate social responsibility, making sure that you're offering training, trying to assist the surrounding, maintaining proper environment, don't litter the waste anyhowly. You have to respect that, the society. So corporate social responsibility, finance manager has a role in integrating CSR principles into financial decision. This include considering environmental, social, and governance, ESG, impact of investment, ensuring sustainable practices and supporting community initiatives. Tax compliance. Adhering to tax regulation and fulfilling tax obligation is essential. The finance manager ensures accurate tax reporting and compliance with local tax laws, contributing to society through payment of taxes. Then to the government. Tunajua pia mambo na tax na kufanya biashara yenye iko legit. Regulatory compliance. Finance manager must understand and comply with the financial regulations and reporting requirements set by the government authorities. This include financial statement disclosure, tax filing, and adherence to laws governing financial transactions. Financial risk management, mitigating financial risks such as currency fluctuations or interest rate changes contributes to financial stability within the organization. So the finance manager should be well informed. Your junior, wale wadogo wako si wao wanakuja kuambia it should be at rate imeenda chini hivi. Hapana, have the information. Then other stakeholders, lenders and creditors. Finance manager maintain relationship between lenders and creditors, ensuring timely repayment of debt and managing credit facilities effectively. I've seen people who don't take care of the creditors and also lenders and suppliers. You find some people staying with their money for so long. They're making some call, you're telling them no today, telling them no. You are discouraging them to serve you tomorrow. You're discouraging them. So make sure that you have a policy. Say that you can have a policy on how you can be clearing your debts. Finance managers, finance managers indirectly contribute to customer satisfaction by ensuring the financial health and stability of the organization, which affect the quality and availability of the product and services. So we say that a happy customer will always bring another customer. A happy customer will always bring another customer. So the welfare of the customer is paramount. The welfare of the customer is paramount. So always make sure that the customers are satisfied. The customers are satisfied. Financial objective. It is a goal of a firm now. Here we have the goals of a firm and the corporate strategy. Goals of a firm and the corporate strategy. Class, we have two goals of a firm. One is a financial goal. The other one is a non-financial. Financial deal with the monetary aspect. Monetary aspects, whereby we want to maximize the wealth of a shareholder, the wealth of the shareholder. Non-monetary, go with the services that you offer and also the satisfaction that you give to your client. Non-monetary. What do you do to the society as well? Do you engage in the training of the society? Do you assist your surrounding? Do you make sure that your environment is clean? You don't pollute the environment in both sides. It can be noise pollution, environment pollution by disposing garbages anyhow. Non-monetary. So financial objective primarily focuses on achieving profitability, maximizing shareholders' wealth, and ensuring financial stability and sustainability. Some common financial objectives include profitability, generating consistent profit and maintaining a healthy profit margin. Growth, increasing sales, market share, and expanding the business operation. Shareholder wealth maximization, enhancing shareholder value, capital appreciation, and dividend. Then financial efficiency, optimizing financial resources, minimizing costs, and improving operational efficiency. Those are financial goals. Liquidity, maintaining adequate cash flow and managing working capital to meet short-term obligations. Make sure that you maintain we have said about liquidity, maintaining adequate cash flow and managing working capital to meet short-term obligation. Remember what we said, managing working capital, we have 4 things. We have to manage inventory, to manage cash, to manage payable, and to manage receivable. We were able to do it practically. Then we have non-financial objective. And a non-financial objective, we say that it encompasses wider range of goals that go beyond monetary consideration. By the way, most of the organization, this is where they fail. I don't know about your organization. You see this one. They don't regard the non-monetary or the non-financial objective. which is very paramount, very important as far as the business is concerned. They usually just focus on the shareholder wealth maximization, profit maximization. You just focus on profit alone. No. We have 3 P's that you need to take care of. People, profit, and the other one, ipatie P zote tatu. You have 3 P's that you need to take care of. People, profit, hiyo ni 90%. Complete the other one. And planet. Yes, those one are very important. Thank you so much. Thank you. Planet represent the environment, surrounding. Those one, ukisha take care of the 3 as a company, sawa. Haya. Let's look at the non-monetary and non-financial objectives. 1, customer satisfaction. Providing high-quality product or services, building strong customer relationship, and enhancing customer loyalty. Very important. Employee satisfaction and engagement. By the way, does your company train employees? Does your company pay for employees to study the CPA or any course that is making them better people, better person? Does your company do that? One day, I know God will bless you with a company. Remember your employees. Let them learn. Remember, those are your resources. Without employees, your company is nothing. See? So you have to keep on engaging them. Some employers are bad. Some employers are toxic. They don't even want you to develop yourself. Hata unasoma ukiwa unajificha. That is bad. That is not a good environment for work. That is not a good environment. A good environment for work is whereby the employer is even happy when you grow. So keep on gauging things, keep on trying. One day, we will be there. Tumesema employee satisfaction and engagement, creating positive work environment, promoting employee development, and fostering a motivated and engaged workplace. Oh, Naomi. Hey. Yeah, I know. Very strict for no reason. Sindio? No reason. Ukiangalia chenye anakuwa strict. Hakuna. Nothing. Let your employee grow. Let your employee develop themselves. Don't be jealousy. Some employers are jealousy. Ati mpaka ile time unakuta hata mtu kama unasoma ile time ya kufanya mtihani inafinywa kabisa. Unaambiwa mpaka you can be told to get to work on Sunday so that now upewe ruhusa ya nini? Ya kwenda kufanya mtihani. Too bad. That's not good. So kama wewe ni employer and you're doing that, that is not right. That is not correct. Okay. Those are non-financial objectives that people ignore. People tend to ignore, which is very bad. The next one is innovation and product development, encouraging creativity, investing in research and development, and introducing new products or services to meet evolving customer needs. Then corporate social responsibility, engaging in socially responsible practices, promoting environmental sustainability, and contributing positively to the community. Reputation and brand building. Overlap and conflicts among objectives. So we have some conflicts among the objectives. Those which are short-term, long-term. Those one you can just look at them. Let's look at agency theory, stakeholders theory, and corporate governance. And corporate governance. So we want somebody to take us through the agency theory part. Just take us through. Just that part who is taking us through. Just take us through, and then we shall be able to look at the next part. We just select somebody here. Creighton, are you ready? Creighton. Are you ready? You can unmute and take us through. Are you ready for that? Creighton, great. Just proceed. Just take us through that part, and then we see. I'll also check whether we have some other part. Creighton, namsikia kweli? Umeongea? Naona unmute lakini sisikii. Ala. Creighton tena ume mute eh? Aha. Just unmute and try to take us through. If you're not in a position, we can have Annette. Eh? Annette, are you there? Let me unmute Annette. Not in a position, no problem. That's okay. No worry. Annette, you can proceed. Today. Okay. Ala. Not allowing. Okay. Ebu jaribu tena. Try again to unmute. Ebu jaribu. Just try. I've just given you the right to unmute. Eh? Okay. Ikikataa tunafanya namna gani? Tuna proceed. We shall try again. So I want us to look at the agency theory, conflict and resolution. Agency theory, conflict and resolution. Agency theory. So I'm going to look at it from different script. I'm going to look at it from this different script, but make sure that you also go through what we have there. But allow me to use a different script here. Allow me to use a different script. So agency theory is a theory that explains the relationship between the different stakeholders and related parties in the organization. So it shows the relationship between different stakeholders in the firm. Different stakeholders in the firm. So for instance, there are various types of agency relationship in finance. Kama ya kwanza hii, agency, shareholder and management. By the way, huwa tunakuwa na watu wawili we have the principal. The principal is the person, the owner. The principal is like the owner. And then the agent. The agent represents the owner. So who is liable to who? Between the principal and the agent, who is liable to who? Who has obligation? Who is liable to who? Is it the agent liable to the principal or principal liable to the agent? Nasema principal ni kama owner. For instance, if you have a farm, if you are shareholders and you have a farm, you see that it is not possible for you to run the farm. Most of the shareholders are geographically dispersed. Most of them don't have even the skill. You see, have you ever seen people starting a business? Yes, they have money. They just got idea to start a business, but they don't have skills to run that business. So what do? They employ the directors to run for them what? Run for them the business. So at that point, the directors will be the agent and the shareholder are the who? Shareholder are the principal. Yes, agent is always liable to the principal. Yes. So in this case, between the two, who is the agent? Who is the principal? Between the management and the shareholder. Management is the agent. Yes, exactly. What about shareholder and the creditors? Management is the agent. That's true. What about the second one? You, Kosawa? Bado. Then managers and employees. Plus, between managers and employee, who is the agent? Who is the shareholder? Is the agent. Yes. Shareholder hapa ni agent. Who is the agent? Creditor, hawa ni wakubwa, ndio wamekupatia loan. You have to take care. You are liable. You have to take care of the loan. Principal while the creditor, shareholder, agent. Yes. What about shareholder na government? Shareholder na hii ukishajua hivyo, kuangalia the problem, how to solve it is very simple. Shareholder na government. So government is a shareholder. Yeah. Shareholder and the government. Shareholder is the agent. Yes. Lulu, you are correct. Shareholder is the agent. Shareholder, agent, government, principal. Yes. Hao wengine, kuna wengine huwa inatisha watu hapa sana. Shareholder na auditors. Shareholder na auditor, we identify like that, and then tutaona the problem that may arise and the causes of the problem and the action that should be taken. Between the shareholder and the auditor, auditor agent. Yes, exactly. Thank you. Hey, you guys. Ndio maana huwa nasema this class is full of geniuses bana. Kuna watu hapa wamekuwa wakisema ati auditors are the principal. Ati juu hapana, no. Headquarter office hiyo ni rahisi. Headquarter ndio nini? Ndio principal. Yeah, branches are the agent. And the last one, manager and employee. Manager is the principal. Good. So let's look each. Wacha tuangalie each of them. Tuanze na agency relationship between shareholder and the directors or the management. Tuanze na hii. Agency relationship between shareholder and the management. agency relationship between shareholder and the management. I hope you've written that. Today, class, I've not given you a break. Kindly, don't worry. Don't worry. Let's just push it. Agency relationship between shareholder and the management. So we write and say, in the field of finance, shareholders are the owners of the firm. In the field of finance, shareholders are the owners of the firm. However, they cannot manage the firm because of the following reasons. Thus, nilikuwa mention some reasons why the shareholders may not manage the firm. Nani yao? Give me those reasons. What are some of the reasons? Hizi nazo tunapitia tu. Hii ni kitu tu ukishaelewa, mambo inakuwa tu rahisi. Hii ni kitu ukishajua, hakuna mtu anaweza itoa kwako. Unskilled, yes. Proximity, yes. Kwenye wako ni mbali mbali. Mwingine ako Rodua, mwingine ako US, mwingine too many to run. Yeah, exactly. There are too many to run a single business. May not have expertise. All those point class, put them down. Those are some of the reasons why shareholder cannot be able to run their own farm. Cannot be able to run their own farm. A single farm. And maybe there are 100. Oh, wow. They are many to run a single farm. Yes. Have those points. Those are some of the points that are varied. So, class, maybe to define agency problem, you say that it is the conflict of interest. It is the conflict of interest between management and the shareholder. Agency problem. It is the conflict of interest between the management and the shareholder. By the way, what are some of the things that may cause this conflict? Hiyo ni swali unaweza letewa. Some of the things that may cause conflict between this person and this person. But here to hizo point. What you have in mind, by the imagine in hiyo, unarelate to managers na mwenyewe. What are some of the things that may bring conflict? Incentive problems. Yes. The managers may require or may tend to put more incentives on their end. Short-term and long-term goals. Yeah. That one, your short-term and long-term goal, it goes in a way that they differ in idea. This project should be done like this, and huyu mwingine anasema this project should be done. Pure remuneration. Yeah, if the shareholder remuneration to the managers ni poor, that one will also bring conflict. Misuse of the company resources and assets. That's also will bring a problem. Zilete zote. I hope people are taking notes. And hizi ni vitu by the way unafaa tu. Hizi ni vitu tu ziko tu kwa hewa. Unazijua. Dividend versus retained earning. Yeah, dividend versus retained earning. Yeah, you may find that there is a problem in dividend sharing. There are some of the things that are not done well. Oh, you guys mko sawa. So I can just go through them. The management may live a prestigious lifestyle fully financed by the firm. Shaiona watu wanatumia mpaka asset za kampuni vibaya. Kama gari ya kampuni unaenda nayo wapi, Unaona? Prestigiously using the assets of the firm wrongly. The management may misuse their corporate resources for their personal gain. That's also another thing. The management may increase their salaries inappropriately. I heard someone, sijui alikuwa live akajiwekea, alikuwa analipwa 90. Sijui akachange system, ikampeleka hadi 200,000. 200,000. So the management may increase their salary inappropriately. Then difference in risk perception. Different in risk perception. Huyu anaona hapa kuna risk, huyu naye anasema hakuna. Project inakuwa undertaken, zote zinakunywa maji. Unaona? Difference in project evaluation. The management may organize for abnormal retirement package for themselves. So class, how can we solve? How can we solve? Solution to those problems. Solution to agency problem. Hizo problems zenye umetaja unaweza zisolve namna gani? Give me the solutions. Give me the solutions. Give me the solution. Tuwapatie kazi in contract form, si ndio? Hii ya P to P2, P and P hiyo inaonekana they are lazy. They become lazy. Kuna wengine ni kwenda tu pale akishaingia kuhang koti pale kwa ile ini wamewekewa hapo and then anatoka. Tapatikana masaa ile ya jioni kwenda nyumbani. Sasa umefanya kazi ama ni koti uliacha ifanye kazi? What have you done? What have you done? So class solution, we can employ them in a contractual basis. You can really solve. Another one, introduction of employee share ownership scheme. Monitoring and oversight. Exactly. That's a very strong point. Yes, very strong point. You can threaten to fire them. Restructuring remuneration scheme. Yes, you come up with a scheme, remuneration scheme. Na hizo systems zikuwe very strong. Very strong. Threaten or firing. Shareholder, they can take it in a hostile manner, hostile takeover. You can incur agency cost. Exercising contractual list outsourcing certain roles. Yeah, certain services you can outsource. Yeah, certain services you can outsource, and many others. Then we have agency relationship between shareholder and creditors. Offering stock options or profit sharing. Yeah, profit sharing. Yeah, you can introduce even a performance-based reward as a motivation. A performance-based reward as a motivation. So between the shareholder and the creditors, we can look at that. You said that creditors are the providers of long-term debt. Creditors are the providers of long-term debt. Creditors are the providers of long-term debt. Debt capital. Full stop. Creditors are the provider of long-term debt capital. They will usually give debt capital to the firm on the strength of several factors. If the firm existing asset structure, so they consider several items before they issue debt. Wanaangalia the existing asset structure of the firm. Wanaangalia hiyo kama asset structure iko sawa. The expected asset structure of the firm. Munapanga kununua assets. Then the existing capital structure or the gearing level of the firm. Those. Plus, what action may cause conflict between shareholder and creditor? Haya, tupate hizo tukimalizia. What are some of the actions that may cause a conflict between the two? Plus, actions that may cause conflict. Defaulting. Yes. If they may default paying the debt, that one will really cause conflict between the two. Hiyo ingine, hiyo ingine. Na wakiuza ile asset yenye inatumika kama collateral. Si pia hiyo high interest Naomi, high interest in which manner? Unajua sasa hapa the person who is liable ni shareholder Okay. Nimeshika. On the other side, if the creditors issue loan at a very high interest, lakini okay, that can be a point. Though you usually agree on the terms at the start, before you get the loan, you agree. So unless aongeze hiyo interest in between, in the course already umepewa loan, tena anakuambia unafaa in that nini it may lead to that manipulation of the financial statement. That also can bring the conflict. That's true. Payment of high dividend. Yes. That's a point. If they pay high dividend and you find that these people, imagine you are paying high dividend and now uko na loan kubwa, breach of terms, yeah. Hey, those points are very strong. So write them down. So kuna hiyo borrowing of more debt capital, payment of high dividend, disposal of asset used as collateral. Imagine unauza item yenye inatumika kama nini? Kama security unauza. So class, how do we solve? Solution to the above. Somebody? Solution, tupate solution. Solution to all those problems. Tupatieni solution. Unakataa kuwapatia deni nyingine. Tena unaweza tuma mtu. Ile anasema no payment of dividends. Yeah, exactly. Ile na convert anatumia ile, unapewa lemon, unaitumia vizuri, unatengeneza nini? Lemonade. Una reverse tu. Kama walikuwa wakilipa dividend inaleta shida. Now, Lilian, that one you have to just unaendeleza kidogo, unaongeza some content hapo kidogo, kwa sababu pia shareholder pia wanahitaji kitu. So maybe you can say excessive dividend. No, wanaweza lipa sao wako na loan, wana service. Another point, tunataka kusolve hizo mashida. Si the creditor wanaweza tuma representative akae kwa hiyo kampuni. Akuwe akikaa tu akiangalia vile mambo inaendelea. Naangalia kama assets zote bado ziko. They can send a proxy or a representative. They can incur monitoring costs, by the way. Any other? Refuse to read. Transfer of asset. Na wanaweza ingia into a debt contract ama debt covenant. Debt contract or debt covenant. Plus, agency relationship between shareholder and the government. Agency relationship between shareholder and the government. Tulisema government hapo ndio principal, na hao wengine ndio nini? Hao wengine ndio agent. Problem itatoka wapi? Action that may lead to the problem, high taxes. Exactly. Hiyo kwanza nayo inaleta shida sana. Hiyo nayo inaleta shida sana. High taxes, hiyo nayo inaleta shida sana. Any other problem? Government na shareholder. Shareholder kiengage kwa illegal business. Great. You guys bana. You guys. Yeah. Agent evading taxes. Yes. Tax evasion. Yes. You guys. Continue with that spirit. Continue with that knowledge. It will really save you big. So, theory. Usiache ati unaacha theory blank. Hapana. Tafadhali, remember that what you have in your mind after all, swali umesoma vizuri. Umesoma swali, si umeelewa? Whatever that your mind is giving you, know that that is the correct answer. And that is it. Solution. How can we solve all those? Government inaweza ika monitoring cost, wanaweza tuma representative pia. Government inaweza offer incentives, si ndio? Investment incentives and so on. So agency relationship between the shareholder and the auditors. Auditor will act on behalf of shareholder, therefore they are the agent. Na principal ni huyu jamaa anaitwa shareholder. So some of the action that may lead to wacha tupate hiyo. I know some of you are auditors, si ndio? Unajua vitu zenye zinafanyaga mkosane. Kuna kwa sometimes na mashida sana. Colluding with the man. Yes. Misleading audit report. Unapatiana report yenye hairime na huwa tunaita unqualified report. Unasema ati ni unqualified. Na sasa unakuta kwamba it is misleading the investors. Unasema kwamba iko sawa, kila kitu iko sawa. That one will be misleading the investor. Demanding high audit fee. Yes, imagine all those points iko sawa. Jameni. Great. Solution to the conflict. Solution. Rotation contract. Sana auditor huwa anafanywa rotation. Hiyo nayo inasaidiaga ku avoid ile familiarity sana kwa kampuni, ile familiarity sana, mnazoeana kabisa. So rotation contract. Legal action. Disciplinary action. Hiyo ni yenye kampuni, the shareholder anaweza pitia kwa ISPAC upewe disciplinary action. Then use of audit committee and audit review. You should not review your own work. Not review. So those are some of the items. Those are some of the items that will really help to solve the problem. Class, tuko pamoja. Are we together? I had told you that theory, that is a nice one. By the way, inaeleweka. Si unaelewa hizi vitu? Ndio theory haina formula, iko tu, yani you just understand what is the concept. Ukwe tuna concept. Once you have a concept, the vitu zingine zinajileta. Hata kwa mtihani tafadhali, know that once you read the question very well, whatever that you're thinking, that one, put it down. Don't leave a blank. And that marks the end of topic number 1. And no, that is topic 1, number 2. Topic number 1. That marks the end of topic number 1. Sasa tumebakisha 2 and 3. And hizo nazo tutachukua tu muda kidogo. And I want us tusimamia hapo. Hizo nazo tutazimalizia in our next class. Hizo nazo tunamaliza mara moja. So one class done, then we start revision. The revision tutaanza na mock. The mock that you did. The mock that you did. Still looking at what you shared. Still looking at that. So hiyo ndio tunaanza nayo. Tutachapa yote kabisa yote, and then we have another one. Nataka tufanye like paper 3 before we sit for the paper for our exam. Sio itakuwa sawa? So topic 2, 3 hiyo ni one lesson. Tuko tumemaliza. So that means next week tunaanza revision all over revision. Na tunaanza na mock that you did. Class, allow us to stop at that point. Asanteni sana. For always being there, for always being there. Goodbye and have a blessed weekend. Make sure that you look at the topic 2, 3, so that wakati tunakuja, you are able at least even to contribute. Asanteni. Patane next week, God willing. Goodbye.